Welcome to Complinet Global Newscasts. News featured is taken from Complinet Complete, our news, analysis and tracking service that provides a 360-degree view of the regulatory landscape. Top stories from the US this week included the Senate Homeland Security Committee Investigations Committee held the first of 4 hearings on the causes and consequences of the ongoing financial crisis. Chairman Carl Levin said an investigation by the panel staff found that Washington Mutual Bank had made hundreds of billions of dollars in shoddy, high-risk mortgage loans, then packaged and sold them to investors as mortgage-backed securities. As the debate on financial reform begins, it is critical to acknowledge that the financial crisis was not a natural disaster, it was a man-made economic assault. Our hearings on the financial crisis will help provide a public record of what went wrong, who should be held accountable, and the ongoing need to protect Main Street from the excesses of Wall Street. FINRA issued guidance clarifying the circumstances in which a firm is required to recognise sub-accounts as separate accounts for the purposes of compliance. The application depends on the nature of the account and the identity of its beneficial owners. The guidance is in line with the US government's push towards greater transparency. From offshore tax-related matters to AML and counter-terrorist financing measures, the US government is demanding that financial institutions be aware of their customers' identities, which necessitates the determination of beneficial ownership. Those who aren't will no doubt face increasingly stringent penalties. In the UK and Europe, the FSA has again been very active this week, imposing fines of £4.2 million on Credit Suisse, Instinet and Getco, following a catalogue of errors which affected more than 100 million transaction reports. The 3 firms were fined for the failings which the FSA said could have been avoided had the firms reviewed their data properly. Alexander Justin, Director of Markets at the FSA, said that firms must meet their obligations to provide accurate and timely data. The standard of regulatory reporting by these firms fell far short of what the FSA expects and requires. We caught up with Martin Coyle earlier today for an update on this story.
Well, sources have told Complinet that there might be more regulatory action in this particular area, while lawyers have also said that firms cannot rely on third parties to report their transactions for them, so firms should be careful in this particular area.
Nearly 3 years on from the collapse of Northern Rock, the FSA has taken action against its senior managers for keeping vital information about the total number of mortgages in default from the board. Deputy Chief Executive David Baker and Credit Director Richard Barclay were fined £504,000 and £140,000 respectively. The enforcement actions both relate to the deliberate misreporting of mortgage arrears figures, which, if properly included in the 2006 annual accounts for Northern Rock, would have either increased the reported arrears percentage by more than 60% or almost trebled the stated possessions figure. And finally, in Asia this week, police in Hong Kong have arrested 3 employees from the Bank of China and charged them with knowingly misleading retail investors by mis-selling investment products. The move has unnerved the thousands of bank staff who were caught up in the selling of products linked to Lehman Brothers before the financial crisis, amid fears that the police might make further arrests. To read about these or any other stories from Complinet in more depth, please log into complinet.com or contact us if you would like a free trial. Join us next week for another newscast from the Complinet News team.